Hello everyone. It's really good to connect in this week's session about some of the features that we are building at Pi42, and so there are so many questions comes around taxation, around uh, crypto futures, and how does it work in India when it comes to taxation, and people are continuously asking for improvements and some of the features that they want to see inside our Pi42 app. So we will discuss some of these points in today's discussion. So starting with that. So as everyone know, I we'll just keep this session a little bit of beginner friendly. I will talk about some of the basics about crypto, as well as some of the basics on futures trading. Then we will come to Pi42 under some of the things that we are building. So cryptocurrency came into existence in 2009 when the paper of Bitcoin was released by the anonymous person, even right now, called Satoshi Nakamoto. And so the whole evolution, or the technology that began in 2009. But a lot of preliminary works around digital cash has been around since 1980s. But everything came into existence after 2009. And since 2009, once in every 4 years, there is a cycle where it's called Bitcoin halving, where the rewards that is given to the Bitcoin miners, uh, that will be reduced by half. And so it happened in 2000. After 2009, it happened in 2013, 17, 21, and it happened in 2025, around second half of April this year. And if you look at the data historically, once after Bitcoin having it done, almost after 400 days to 500 days after the process, Bitcoin price has been always increasing. And Bitcoin is still, if you look at the use case of Bitcoin, it's still seen as a store of value. And to to work along with Bitcoin in 2013, the second biggest cryptocurrency which came into existence, which is Ethereum. And so it came with a nature that where you can build applications on top of this whole cryptocurrency ecosystem. Even if you see the market cap of this whole crypto industry right now, it is at $2.16 trillion right now at this moment. And if you see the market cap of the first top two cryptocurrency, which is Bitcoin and Ethereum, that alone holds around almost 75%, more than 75% of the whole market capitalization. So I can literally say that So whenever the price movement happens in these two assets, especially with Bitcoin, the whole market moves towards that direction. So that is how it has, this industry, whole industry has been always. And right now, Bitcoin is the number 10th topmost valued asset in the whole world. So number one is gold, and followed by that few of the tech companies listed in Nasdaq, and then followed by that there is silver, and then Bitcoin comes at number 10th. So definitely there is a appreciation that we can expect by next year if the previous historical data suggests the same. Probably we can wait and watch how this whole industry and technology evolves around cryptocurrency. And when it comes to taxation around cryptocurrency, so let's talk more about that part, how it works, and especially how it works in Indian market. So as per government classification of this specific technology or asset, they classify that as VDA, which is virtual digital asset. So any cryptographic code or a program or a token which can be transferred from place A to place B with a where you can exchange it for a value, then it is called as a VDA. And as per Indian government's tax regulation, so there are three important things that you need to think about when it comes to crypto taxation. One is the important thing is whenever there is a VDA transaction involved, there is 1% TDS is applicable. So for example, if you are buying a asset worth say 100 rupees in INR value, so 1 rupee so will be deducted as TDS, and government will keep a track of it. Definitely, obviously, you can at the end of the year you can show all the proofs, and it's just a TDS. You can show proofs and get it reimbursed, or you can show the taxes properly on that. And so another important clause you have to see is there is a direct 30% taxation. So any benefit you get out of selling the particular asset, you need to pay direct 30% tax, and it doesn't come under your taxation slabs. So it's a direct 30% taxation. And another important clause is there is no way you can set off losses. So for example, in a typical equity market, how it works is, say for example, you buy a stock of company A for 100 rupees, and stock of company B for another 100 rupees. So, and you make 10 rupees profit in the first transaction and 5 rupees loss in the second asset. So your net profit and loss is 5 rupees. And when it comes to taxation, you will end up in paying long-term capital gains or short-term capital gains, and also that is based on your taxation slabs. So like it could be 10% or 20% or 30%, wherever you belong to. And so this is not applicable when it comes to cryptocurrency. So how does it work is, say for example, you make in the first transaction you make 100 rupees profit in a Bitcoin transaction, and in the second transaction you made 50 rupees loss in a Ethereum based transaction. Think you're buying it from an exchange or selling it in an exchange. So in your net PNL is still 50 rupees here, 100 rupees profit, 50 rupees loss. But as per government policy, how does it work is, so probably I'll put it in a very simpler way. You can ignore all the loss making transaction from your P&L statements, and wherever you have made profits, you need to pay direct 30% taxation on that. So in this example, you made 100 rupees profit and 50 rupees loss, but you still need to pay 30% tax on the 100 rupees profit that you made. So that is how it works as per the government regulation. And this rule came into existence in 2022 budget, and it all the exchanges and everyone started following it since July 1st, 2022. And and also government amended a new clause when you file your taxes called 115 BBH, where you declare your VDA asset and make sure you're following these tax guidelines, and then paying taxes on that. So as per if you look at government's regulation, especially in India, around the whole crypto ecosystem. So in 2013, government or put it in the right way, RBI announced a ban on crypto. And in 2018, government again announced that crypto is not a legal tender, and it went to Supreme Court. And in May 2020, and the Supreme Court revoked that ban on crypto. And then these all this tax regulation came into existence since July 2022. And in the recent G20 meeting that happened in India, so there was one consensus that came a bit across all the countries. They spoke together and they all agreed that definitely there should be a regulation around this whole industry, and every country will work together to make sure that there is one common regulation. So definitely, even right now, we have a lot of regulation from different countries, but there is no such common consensus that is agreed upon from between different countries. So definitely, we can expect that very soon from countries. Probably that could come from G20 countries who are all part of that alliance. So, as per government's VDA classification, what does it say is, for example, if you are purchasing some service using crypto, or you are exchanging cryptocurrency, or you are doing trading within an exchange using fiat currency INR, or when you receive crypto as salary, or when you receive crypto as gift, or when you do crypto mining, or even if you receive airdrop from a new token that's going to be launched, or if you are into a staking, if you receive a staking reward from a third party platform when you stake your crypto. So all these are come under VDA class. So that is how government structured this. And what happened after 2022, this strict tax regulation was, uh, India's contribution into the total crypto industry market volume was around 0.5% at that time. So within next 6 to 9 months timeline across Indian exchanges, they saw a drastic uh, down in terms of volume. So it almost came from 0.57 percentage to almost it came closer to 0.03 percentage. So it reduced to a very minuscule volume. So it doesn't mean that people stop trading. So most of the users who were trading inside Indian exchanges, they all started looking at foreign exchanges. So that is what happened during that time. And so while we were looking at this scenario, what at Pi 42 we were thinking was definitely there is something that Indian users need, where we always make sure that we follow Indian government's guidelines around taxation and everything, and at the same time, Indian customers should get benefit out of trading without going to any uh, any trading platform outside of India. So that is how we started thinking about Pi 42, and that is how the whole concept came into existence. So if you look at this whole industry, there are two major types of trading. One is spot trading, then another one is futures trading. Uh, so I just want to give a quick brief about so what does it even mean by futures trading, and uh, how does it work, and why it came into existence. So the history of futures trading goes back sometime around 1700s, and so this was first introduced in Japanese market. And uh, when I was reading a book written by a professor from Wisconsin University. It was a book written in 1966. So the professor wrote about how futures trading evolved and came into existence. Yeah, I'm looking at the comment. Sorry, I'm not that good at Hindi. I can definitely try talking a little, but it's very difficult for me. Probably in the future session, probably I'll just prepare, and then I'll definitely try. Thank you for considering that. So how futures trading evolved was, you go back time in history where people were when I say history, I'm talking about people when people were ruled by kings, or people were just tribal groups. So they were transacting gift, or kings used to give gifts to their people, or doing some performance. They give some gift. So that is how people started transacting a particular asset from place A to place B. So that is the origin of how people started transacting. So so think about a time when people started transacting an asset between groups. For example, a king started giving gifts to people from another tribe. Or probably think, even a better example is, there is a marriage happening between two people from two different tribes. So they started exchanging gifts. So basically it went from intra gifting, from intergroup gifting. So that is the origin how people started transacting things. So it was happening within the same region. Then came into existence that people started moving out of their country. They started moving out of their country. They started invading countries. So that is when the total time period of colonizing existence. So then there came a system called barter system, where you exchange something for something else. So for example, they take out rice from one place, and on behalf, on exchange of that, they will give out wheat or something else, or coffee. You can think of something like that. So the whole system of barter system came into existence after that. So that led to a place where people do barter system. They take one asset from one place and they move it to some other place. So that at that place where they moved that particular asset, they started creating markets. So that is the origin of spot market. So we can think about literal market. We can see in our cities where the shopkeeper places things out in front of the shop, and put a price tag, and then they sell some asset. So that is called a spot market. When it say spot, it means that you give out something and you buy something on the spot. So that is when it's called a spot market. Say you give out 10 rupees and buy a coffee. So that is spot. On the spot you are exchanging stuff. That is how spot market came into existence. And later this moved into uh, a system where you started writing things in contract. So I can give you an example how this evolved. uh, Say take rice. So rice doesn't you cannot harvest rice throughout the year. So there is a time period where you will keep harvesting in a year, and then rest of the period you need to wait for the particular asset to grow, or all the farmers will help it grow. So there is a time period you need to wait. So what traders started doing is, so you go and sign a contract with the farmer. So at the end of next 4 months, I will buy rice from you. So at this particular price point. So that is when people started doing contracts to trade. So this whole concept of doing trade through contracts came into existence in 1700 in Japanese market. So the exact name is Choi Mai. So it literally means in Japanese that rice trade on book. So they are the first one to introduce this whole concept. So then it became like a futures contract. So what they had was, they had a clearance house. Probably you can say it's a trade house. So there they will make a trade book of both buyers and sellers, and there will be a time period of 4 months, and both buyer and the seller needs to agree on a price point, and the trade house or the clearing house will make sure that they get the money from one side, and asset from the other side, and they do the settlement at the end of every fourth month. So this is the whole history of how futures market evolved. Probably I can just give a quick example. So for example, I'll tell more in an Indian context. Say you're purchasing coffee for 10 rupees a cup right now, and you go to a restaurant owner, and you sign an agreement saying that after 2 years you will definitely buy coffee for the same price, 10 rupees, and he needs to agree on that. But there are a lot of things that could change in the meantime. Probably price could go up, or if the demand for coffee reduces, probably price could go down also. But regardless of the price movement, whether it goes up or goes down, the obligation is for the restaurant owner is to serve your coffee at 10 rupees after 2 years. And obligation from your end is, regardless of that, you definitely need to pay the 10 rupees, even though if the market is going to be below the price point. So that is called futures trading. But there is another concept that is introduced later, that is called perpetual futures. Because typical futures trading always comes with a expiry date. In perpetual futures, there is no expiry date. You can keep the asset as much time you want. So, but for that, you need to pay a price to keep the asset for some more extra time, since you are holding it infinitely. So that is when there is a concept called funding rate that came in. So funding rate will try to keep the price point of that asset closer to the spot market price. So in crypto industry, how it works is, at every 8th hour, so there is a funding rate that is calculated, which make sure the particular futures asset price is closer to spot trading asset. So that is the price people will pay because they are holding that particular asset in futures market infinitely. So, and definitely futures trading that allows the customer or the trader to do a trade with leverage. For example, if your capital is say 100 rupees is the whole capital that you want to put inside the market, and if a platform provides 25x leverage, so you can definitely go and trade for 2500 rupees. So that is how the whole concept of leverage works. If you are a beginner entering into futures trading, you should definitely need to understand how some of these basic things work. So yeah, so this is the simple example and whole history of how this futures came into picture. And let's come into let's talk more about pi 42 right now. So why pi 42? So if you look at any cryptocurrency specific in any crypto asset, if you see the transaction volume between the spot trading volume of that particular asset, compare that with futures trading volume of that particular asset, it's almost like you can always assume that it's 5x to 20x because of this whole concept of leverage. So that is one advantage any user on Pi 42 then can take it up, that we are also providing up to maximum of 25x leverage across asset. So we are continuously looking into it, and we in the nearby future we might increase the leverage of some of these asset. People can go a little bit further, but we will also make sure that we try to minimize users customer risk as much as possible, because that is one reason why we don't allow huge leverages on our platform. And the major advantage of using Pi 42 is the taxation benefit comes with that. So as I said, as per government's regulation guidelines, the futures trading, the whole concept of futures trading doesn't come under classification of VDA, because in a futures trading, you're not actually transacting any virtual asset from one place to another place. For example, if you're trading uh, Bitcoin for 100 rupees margin, you're not actually buying that asset from any from the buyer, because there is no concept of any cryptocurrency transaction involved in this. Okay, I'm reading all the comments. Definitely, we will have Q&A at the end. I'll go through some of these comments, and will answer some of these queries. So as I said, the main advantage of using Pi 42 is the tax benefit. So since this is not classified as a VDA, so there is no 1% TDS, there is no flat 30% taxation, and there is no concept of no set of losses. So it typically becomes same like how you buy an asset from a equities market. You can assume it's similar to that. So definitely that helps all the especially Indian customers to come and trade more with INR asset. And another major advantage is we don't as from a customer perspective, they don't need to worry anything about trading anything in a stable coin asset. Typically, if you see in any exchange, or even most of the exchange inside India as well as outside India, so the margin asset is mainly used as USDT. So so which is a stable coin. It's a cryptocurrency which is a stable coin which is pegged to US dollars, which is in when it comes to Pi 42, as an Indian customer, your input is going to be INR. You deposit INR and you withdraw INR. So there is no need to worry about crypto transaction at all in the whole trading experience. So which becomes it similar to how you trade in a different, probably an equity market. So that simplifies the whole trading experience on our platform. And your money stays with Indian banks. So probably you can think Indian banks are our custody provider. So there is no risk of worrying about where your money stays. And so one thing we are not doing right now is allowing crypto withdrawals, because so that is one thing. Even when it comes to regulation, government is really worried about. They are unable to track when people withdraw their crypto, which we are also not allowing at this point of time. So that makes our platform more secure and safe in a way that people just deposit their INR and they trade in INR, they take out INR, where their whole money resides within Indian banks. And so right now at this point, we have listed closer to 80 different contracts. So we call it as contracts instead of cryptocurrency tokens, because that is what you do in a futures trading, unlike you buy an asset in a spot market. And we have assets in we have assets that is pegged to INR, and also we have assets which is pegged to USDT. But the way how you trade, where you invest your money, it still remains in INR, which very much simplifies. So to probably to put it in a very simpler way, if you want to trade in Bitcoin, so you can trade in BTC INR contract, or you can trade in BTC USDT contract. So based on your convenience, whichever you are comfortable with. But the underlying your margin asset still remains Indian fiat currency, which is INR. So that doesn't change regardless of which market you buy the asset from, whether it's INR market or USDT market. So that gives more advantage for pro traders who always look at prices, probably from who keep track of things from international exchange, or keep track of things internationally, which is pegged to USDT token. So they can easily look at the price, and that makes their trading very simpler as well as easier. And at this point, we are only allowing isolated margin mode for trading. And probably soon, right now at this point, we are working on building the other modes to trade, which is cross margin. So our whole team is working towards that. So probably we can have a separate session to explain more about what is isolated margin. For example, I can just explain in a very quicker way. Say your initial capital is 2000 rupees, and you allocated 1000 rupees to buy a BTC INR contract, and another 1000 rupees to buy a Ethereum INR contract. So even if you lose money in one of these asset, so your whole margin that you loses, it's going to be that 1000 rupees. So that is how this is the whole concept of keeping your margin isolated. So every trade will have its own margin isolated without disturbing the rest of the margin. So when it comes to cross margin, so I would definitely say it's more for people who is not a beginner, who has some little more knowledge about trading, and how this whole system works. So where some of these margin inside your wallet balance, the remaining wallet balance money will also be used for your existing position. That is what called as cross margin. Probably we'll have a bigger session separately once we launch the whole feature. And if you look at the transaction fee that we are charging, so definitely we are the lowest in Indian market. For example, if you look at our USDT market maker taker fee, we are charging 1.8 basis points, which is 0.018 percentage as a maker fee, and 5 basis point, which is 0.05 percentage as taker fee for USDT market. So that's our price point. And so we are keep on listening to some of the feedbacks and some of the feature request that is coming from different channels through Telegram, Twitter, and all the other places. And we are also continuously improving our system. And we are building some of the features that is continuously requested by our users. So you can look at some of our top users under our leaderboard section. And our marketing team is keep on continuously organizing contests and events to keep the users more and more engaged. So we will be conducting more and more events towards that in the coming future time. And yeah, so these are the definite advantages of using Pi 42. Probably I'll just just repeat some of the points I mentioned. Especially the major one is the taxation for whole futures trading is completely different from how taxation works for a spot market. So you can definitely get the tax benefit. Also, you will have the benefit of trading completely in INR without worrying anything about a cryptocurrency transaction involved. And definitely this is, as I said, this is more safe and secure mechanism, since Indian banks works as our custody provider. And we look at the risk involved with individual cryptocurrencies, and we set leverage so that that minimizes uh, risk exposure of individual users. And we have a very good referral program where people can take advantage of referring people, and both the referrer as well as the referee, both the person who referred and who got referred will get the benefit out of this whole program. So that is always running. You can always get the benefit out of it. You can bring in your fellow traders into our platform, and both of you will get the benefit. And we recently launched our iOS app. So we were only in web and Android, and so early this month we launched our iOS app. So definitely that is picking up. So please use the app and give out your feedbacks. We are keep on listening, and we'll be taking up some of these requests coming through, and we'll keep improving our platform. So these are the current existing system. Let me spend a few minutes in talking about some of the upcoming features that we are building. So one major thing we are building right now is, since this was requested by some of the pro traders on our platform, that they want to have cross margin trading facility. So we are working on that. So we will definitely announce the release time probably sometime around next month. So we'll keep the team, a whole user community updated on that. So that is one major feature that we are building. And another request that came in on doing API trading. So that is definitely for pro traders. So we are working on that. So that is also in our pipeline to be released by next month. So while cross margin will be released for the whole set of users, so API trading, we will keep it for a closed loop of people to begin with. Then we will release it for a larger audience. And we get a lot of feedbacks on our existing deposit and withdrawal methods. So we are continuously improving that system. So how we make sure that both deposit and withdrawal will happen instantly. And we are working on another feature where you once you deposit money, you can move some of the money into a separate wallet, where that only your trade will happen only from that wallet. For example, you deposit money into your INR wallet, and you move if you deposit 1,000 rupees into your INR wallet, and you move 500 rupees into your futures trading wallet, only that 500 rupees will be used for trading, and your rest of the deposit will remain in the source wallet or the deposit wallet, wherever you have deposited in. So that is one of the feature people were requesting in. We have added that feature. That will also be part of our one of our upcoming release. And another feature that was requested was to send out emailers or notification the moment a limit order or a pending transaction getting executed. So that is something that we are working on. So that will also be part of our upcoming release. And right now at this point, we are launching at least one token per day. We will be keep doing it for some more time. Also, we will make sure that we are listing quality tokens where people also will get the trade benefit out of it. And another feature that was requested by some of our traders was introducing stop market and stop limit feature. So that is also something that we are working on. So that feature will be part of our one of our upcoming features. And trailing stop loss is something we haven't started yet, definitely, but that is definitely in our pipeline. So we will be picking it up once the next release goes out, and we will be working on that feature. And so another feature that was requested was copy trading. So that is also another feature. We haven't picked that up yet. Probably we'll see how we can accommodate, or how we can build it as a feature that is more useful, as well as in a more safer way. We will definitely consider that and pick it up in the nearby future. So these are the some of the things that we are working on, and we are continuously listening to customer feedbacks, and we are continuously improving the system. So keep your feedbacks coming in. We will definitely make sure that we are listening to you, as well as we are delivering what user ask on our platform, to make sure that it is the our users are getting benefited out of this experience. So these are the points I wanted to talk on today's session. Definitely, we will have one more session with our next release, some of the major upcoming feature that we are releasing. So give me a quick a few seconds. I'm just going through some of the comments that is coming in. What is the tech stack used for building the Pi 42 app? So this is built on native. Both are native applications, just to make sure that the applications are more performant. But we will be keep making UI UX improvements. So that is also another major change that we rolled out in the recent Android release, where we completely redesigned our trade terminal. So we will be keep improving that. Please do share market trends over email or short video. Definitely, we will let our marketing team know. They can help on that. I'm a regular Nifty trader now, starting using Pi 42. Definitely, that's really good to see. So definitely, you can reach out to us if you have any doubts or any queries. We can definitely help. And there are a lot of audience and user community people in our Telegram channel. They also help each other. So you can post your query there as well in our Telegram channel. How different Bitcoin or crypto is from actual gold? So you can probably, to put that in a very simpler way, you can assume gold is a physical asset you hold in your hands. So Bitcoin is a equivalent asset, but in a digital manner. So as I said, right now, gold's market value is right now, it stands at $17 trillion today, and Bitcoin is at $1.1 trillion. So there's a 17x different. But if you look at the history of gold and the history of Bitcoin, you can see which is growing very, very faster. So we'll definitely see whether we can talk in Hindi with the next session. Sorry about uh, I'm not that fluent in Hindi, but definitely we will try out best from next session. So that's all we have for today's session. Definitely, as I said, we are listening to customer feedbacks and queries that is coming in. We are keep on improving the system, and we will keep delivering our best, and keep make sure that we are building one of the best platforms for futures trading. Thank you, thank you, thank you, thank you, everyone. Thanks for